Welcome, traders, to another Tickmill trading update with me, Patrick Nunley. Want to update the S&P 500 view using the E-mini futures contract and put together a trade plan for the week ahead, looking at some potential action areas and some realistic price objectives as we head into what is going to be a holiday shortened week in the US as markets are closed on Thursday and it's a half day on Friday. So we can expect volume to start tapering off, I would suggest, into tomorrow's session and participation of volumes to remain light on the light side, certainly, until we head into the beginning of next week. So something to be cognizant of in terms of the market dynamic is the potential for overshoots in price movement due to lower participation. So keep that in mind in terms of your position sizing, stock placement during this period is my best advice. So before we jump into technical picture, let's see where we are in terms of the macro side of things. I'm using the Morgan Stanley Sunday start update here and highlighting US home sales. And Morgan Stanley expect a little change in home sales. 1% decline to 730k annual rate. We have consumer confidence on Tuesday, 109 versus a 108.7 seen last month. We also get the FOMC minutes, expect the minutes to emphasize data dependence and perhaps give some assessment of inflation data coming into the last FOMC meeting. However, as we just got these the US elections out of the way, it's going to be the next meeting that is going to carry more weight. I believe that is December the 18th. And then into Wednesday, we obviously pack in a bit of data here with markets being closed on Thursday. So we get second revision of US GDP, personal income and spending, looking for a nominal rise there. Forecast that personal income rises an estimated 0.42%. With labour income similarly 0.41% according to Morgan Stanley. We get PCE inflation looking for 274 month over month and a headline 0.252. Durable goods, core and capital goods orders and shipments continuing to trend sideways. And we get jobless claims also on Wednesday. Jobless claims to bounce back to a still relatively low 219k for continuing claims. Expect a reversal, a drop from last week's 1.907 million to 1.870 million. Then pending home sales, and like I say, markets in the US closed on Thursday, and Friday we have sensibly a half day. So in terms of data, there's nothing of note there. So that's where we are in terms of the macro side of things. We obviously, over the weekend, we had the announcement of the new, or the pick, Trump's pick for the Treasury Secretary, Scott Bessent. And markets have greeted that warmly, as I think they see him as a market-friendly choice, certainly, and someone who has a deep understanding of markets after working at the Soros Fund with Druckenmiller, Bessent and Druckenmiller, famously heavily involved in breaking the British pound back in the day. So that's where we come into the week and where we stand from a macro side of things. We also still have geopolitical risks simmering in the background, so keep an eye on the wires as we can see some short-term volatility depending upon what we see in terms of announcement-wise there. Weekly chart, we have a potential five-wave sequence that I've been tracking and talking about versus the 5107 swing low. 5 equals 1 will put us up into the 5200 area. The yearly R3, 5204. Those are the ultimate objectives at this stage for this move. And we recovered last week to close on the week in a bullish stance given the 5-period volume weighted average price, which now rises to 59.17. You'll recall that I talked about this 59.20 at the back end of the week being important as a near-term gauge as to who has the better footing in the market at the moment, and it certainly appears to be the bulls at this stage. And so keep that 59.17, 59.20 area in mind. as long as we're trading above there, I think pressure remains to the upside, and certainly in this holiday short week. Note that from a probability perspective, Wednesday and Friday have about a 90% probability going back through the data over the years of closing in the green. So any weakness that we might see in the beginning or tomorrow, beginning of the week or tomorrow, I would be anticipating would be resolved to the upside at this stage. So that's where we are on a weekly perspective. Moving to the daily time frame, we are trading just above the 78.6% retracement of the last leg to the downside, completing into that pre-election low. The post-election correction, which we are now once again resolving and testing to the upside. So with that being a base into that 58.50s, then the 127 extension is our next upside objective from a technical perspective. Once you overcome price cycle highs into those 60,050s, so that's going to give us a 5100. We know we have the equality objective versus the swing structure, swing low at 53.90s, which also targets that 6100 level. So that's going to be our key upside objective. From an implied volatility perspective, market makers are pricing in 65 points of movement to the upside or to the downside this week. A much tighter range given the last couple of weeks, and that's principally due to the holidays. But 60-70 is going to be a key area to pay attention to as potential range resistance. And to the downside, the 59.40 is the potential range support. So moving to the action area charts for the week ahead, I'm using 59.50 to 59.40 as my bull bear zone for the week. So whilst we're above there, I'm looking to play the market from the long side. Any pullbacks heading into the early part of the week, like I say, that retests the 59.90s. That's going to be my first area of potential intraday support. Now, on this 4-hour chart, I've got two parts here. This is the hourly chart, and this is the 4-hour. They both head pretty much in the same direction, just potentially different routes. So, if we hold the gap at the moment and extend up into the 60-30, 60-40 area, I'd be watching for bearish reversal patterns there to see a pullback that retest those 59.90s, heading in ideally into tomorrow, where I'd be looking for a base to be put in place to challenge the weekly range resistance, and then above there, obviously that 6100 is the target. The alternative scenario is that we open up today and we get some responsive selling that pulls us back into those 59.90s. We watch for bullish reversal patterns there. Same upside objectives, just a different route. So we'd be looking for a move then up into the 6,030, 6,040s. Could see a pause there before looking for further upside during the week to target price cycle highs and then onto that 6,100 area. So the levels to pay attention to are going to be this 60-30, 60-40, 60-70. Once we clear price cycle highs, these are potential pullback zones. I'm not suggesting major corrections, but certainly you can play for 10 or 20 point corrective moves. And our ultimate objective is going to be a test up into this 6100 level for this phase. At this stage, it would take a close back through the 59.40 to set up a retest of the 59.20s and lower. And I would update those levels during the week. But for now, as we start the week, this is the posture I have. I'm still holding long positions myself and looking to add to those. I will trade that first test of the 60-30, 60-40 to the short side, and I'd be looking then for any profits that I may gain there to stop and reverse and trade up into our target areas. And as always, traders, plan the trade, trade the plan, and most importantly, manage your risk. Until next time, thanks very much.